Thanks for tuning in for this month's Best Moments of the Futures Radio Show podcast. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show podcast on iTunes, YouTube, Google Podcasts, Spotify, or Stitcher. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Futures symbol, RTY, and Micro E-Mini Russell 2000 Futures symbol, M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. This is one of the things I've been waiting to talk to you about. It's like, you're one of the nicest guys I've ever met, and you're one of the last guys I'd ever mess with, because I know you have black belts and all these different things, and it's like, okay, I want to know how much martial arts have had an influence on your career in trading.
Well, I would say this. I have been blessed with having fantastic instructors in a variety of different martial arts. And, you can teach, for example, karate as a sport, you can teach it as an art. And I was blessed with instructors that taught the art. And I've had a chance to share that with other people. I think what it does, no matter what the martial art is, by the way, there's a common goal. And the goal isn't self-defense. I've never used my martial arts, actually. But the objective is for you to learn something about yourself. It's your self-discovery. And the martial art, whether it's punching or kicking or throwing or whatever you're doing, or the weapon that you're working with, it's just the tool that leads you down that path. So I think that helped me tremendously. It helped me be patient, waiting for that trade to develop, for example. It helped me in terms of how you react to a market. I've had the chance to work with institutions around the globe, and I remember being in a bond dealing room in London, and this fellow, he slammed his phone down so hard he broke the handset. That's hard. It's hard to do that. But, there's an old saying, an angry man defeats himself. And that's what was happening. Did he see other opportunities that could have been better than what he just got out of? No, because he's lost in this anger at that moment. And it's just not productive. It's like what you said, and I think that was so important about you healing. Were you surprised to have a loss? No. It's a business decision. It has an outcome. Now you go to the next trade. So I just think those pieces are important. And for me, martial arts helped in that regard. It helped me stay focused, I guess, on what I was trying to accomplish. And so I think it was a good guideline for me. And plus, it also offsets what you're dealing with on a daily basis when it comes to the markets, whether it was a productive day or not a productive day.
Creates balance.
Creates balance. There you go.
Yeah, I mean, I early on in my career, I was the person who would get very frustrated, even though Mickey would always say I was in a good mood. I had a lot of internal frustration, and sometimes I would, go and lift weights and just do other things and just like push myself really hard to kind of like burn off that frustration. And all that did was kind of feed it more, because I wasn't offsetting it. I wasn't creating balance. In the middle of my career, when I began to meditate, I felt so much more in control of my decision making during the day. It just creating that balance to when I'm at my screens, I actually could sit there and be more present, be more focused on what was happening, instead of having this kind of fiery attitude, which is where I was prior to that.
That is an excellent point, Anthony. Excellent point. You're right. That does make a big difference. It allows you to stay in the present moment. There's two things that I think are important. Staying for us, not only just in trading, but in life in general, is staying in the present moment. And I when you said that, you made me think about two groups. One were the Spartan warriors in Greece, and the other one were the Japanese samurai warriors. Different parts of the world, different points in time, but they had two common beliefs that I think are so powerful. The first belief is they focused on eliminating the fear of death. Now, if you're a warrior and you're going into battle and you're afraid to get hurt, you're dead.
Yep.
If you're a warrior going into battle, and this could be it. If you went in with that attitude, imagine what it does to your brain, how freeing that moment is. Are you going to hold back when you swing that sword? No. And you hear these unbelievable things that would occur with these two different groups in battle, but they allowed that to happen. It was freeing, just like you said, when you understood the risk, when you had a chance to relax, which is that meditation. It's freeing. It allows you to be free to just take advantage of the moment. And that was the second thing that they did. They focused on stretching the present moment. For example, if I'm going into battle and I think about yesterday, I had a really good day yesterday, it's irrelevant to this moment. Or tomorrow, I got to get through this moment to get to tomorrow. So they realize the only moment of time that we ever have impact is the present moment. And we experience it in little ways all the time. If you think about a food that you love, that you make, your family makes, or you go to a restaurant, they just do it like nobody else can. When at that moment, when you see it, all your senses come into play. You smell it, you taste it. It's fantastic. Your mouth is watering. Those first few bites are unbelievable. It's everything you thought it would be. That is the present moment. You're really experiencing that taste. I mean, typically we eat mechanically. We don't eat in the present moment. So it's that mindfulness idea. And these Japanese samurai warriors spent a lot of time trying to be aware of the present moment, because in battle, that's where you live. And when you and I trade, we're in the present moment at that moment, whether it's a trade for 5 minutes or a trade that's going to last for 5 months.
The 3 S's. Talk to us about that.
Yeah, so the 3 S's, right? Significance, security, and safety. That's what most people are chasing in life, and wrap happiness around that as well, right? So 3 S's and an H. That's what most people are going after. But what I found with what gets a lot of people in the trading field in trouble is that their life is contingent upon outcomes, right? If I have a good trading day, good trading week, and I make money, I feel good about myself. And if I have a bad week, I feel horrible about myself, when really the two should have very little to do with one another, right? What you do is you're a trader, right? You trade for a living. You're going to win some, you're going to lose some. And based on your intelligence and instincts, we know that you're going to make more than you lose, right? That's our goal for you. But that should not play into who you are as a person. And there's Anthony Crudele, and then there's the trader, right? Which is the profession. And I remember years ago talking to Roger Clemens at Yankee Stadium, and he said, D, I want you to remember something always about me. He says, being a pitcher is what I do. It's not who I am. What happens on that mound every fifth day does not determine who I am on day 6 or immediately after that game. It's just what I do. So you need to find your own significance and your own security and your own safety within yourself, because you're putting too much pressure on yourself and you're putting too much expectation on the market if you're going to allow that to dictate who you are, right? When the market's green and you're feeling good, or if it's red, you're feeling bad, you can't do that. I mean, you'll be having mood swings like crazy, and you'll be in an identity crisis for the rest of your life as a person and as a trader.
Yeah, absolutely. I mean, listen, if Roger Clemens, look at it, is there a more intense person than Roger Clemens? And he said that, I'm a pitcher, but that's not who I am. And I struggled with this so much, Coach, because I think so many traders out there can relate to this. You put so much into it. It becomes so much part of your identity, your DNA. You want to win so bad. And on losing weeks, you got the shoulder shrug. On winning weeks, you're out there, feeling good. That took me a lot of time to really find that balance, to be able to just say, look, I'm following my process. I'm trusting within my process. This isn't a good week. No matter what, don't let it impact your life. But I want to stay there for a moment, Coach. How do you help people get to that mindset? Because as competitors, you talk about having a champion's mindset. We're so competitive. When we lose, we get pissed. So
yeah.
How do you help people deal with that?
Yeah. Well, first off, it's okay to have those emotions, right? Competitors, they do wear it on their sleeve. It's okay to get pissed off. And anybody that you work with that tells you to shut down your natural emotions is giving you poor advice. That's who you are. There's some people that are high octane, high horsepower people. I'm one of them. And there's other people that are much more naturally calm and methodical, and they have their way. Every trader could have their own unique way, their own unique style, and you need to honor that, right? But at the same time, you got to make sure that there's a baseline of self-security and self-belief that's there. And again, this teeter-totter between I find security in an external thing like trading or external outcomes, that's going to wipe you out. That's what's really costing you. I can't tell you how many guys I work with, they make money and they still think they're a failure. That's not based on their trading. That's based on them as a person, right? There's a security issue and a belief, a self-belief and a self-esteem issue there. So if you want to get real with yourself, that's the first step to being a great trader, but most importantly, living a great life, right? Because it's going to change how you trade. It's going to change just how you go about your business every day. Again, when you were a young guy, I don't think I would see pictures of, on Instagram of you working out in the middle of the day or playing golf or going for a walk. I don't think I would see that because you'd be panicked, right? The security wasn't there.
I don't have great statistical reasons for some of the things that I do, but I find ways to make them work because I believe in them. It's weird how that will actually carry more weight with me. I've actually tweeted about this, that if I believe in something, I will find ways to make money with it versus something that someone tells me, this just works, 80% of the time, which really, I've yet to see really anything that does over a period of time work that long, but right. Yeah, I know. Sure. Right. But you get what I'm saying. So it's like, because I believe in something and because I look at it and it fits within, my eye, I like it and I just use it.
Yeah, no, I hear you. Just random things. I think with all the tinkering that we do as technicians, there is so much of it that's it's not science. It's more the art part.
Yeah.
You find things and you maybe alter them here and there, you just kind of find this process. And if someone told me that they bought 19-day high breakouts, I'd say, okay, that's cool. If that's,
Totally.
If it wasn't working, I don't know why you keep doing it. So I assume it's working.
Well, there's a million ways to skin a cat. And what I also find interesting is that you're a CMT. You went through this technical process. Your daily process is very technical. It's very methodical, but you still use some discretion.
Absolutely. And again, it goes back to kind of that more art than science. You can back test anything. And the CMT covers this a lot. They cover some of the best back testing techniques I personally don't do a lot of back testing, if I'm going to be completely honest. It's more of just the feel of when you're in the game, how you want the portfolio. Like, we don't have strict rules on how portfolios are allocated. Sometimes we might be in a bunch of S&P, like at the beginning of this rally back in March and April. Like, we didn't really know what was going on. Was this sustainable? So we're kind of just crowded over in the S&P. So I think that there's so much of the technical side that is very fluid.
Yeah, I think you said it well. It's more art than science. I think that goes, if you're trading, I think that's, unless you're a systematic trader who's doing this purely through automation, I believe in that more art than science a lot.
Absolutely. And if you're a scalper, you're running some type of algorithm where you're looking to make 1,000 trades a day, I totally get that.
Yeah.
But for the way I view the markets and kind of the portfolio construction side, it's just how I see it through my eyes.
I want to go back to you going through the CMT course and talk to us a little bit about why, after you had gone through some of the things you learned, why this is the route you chose, doing the relative strength 2-month breakout highs.
So I guess to start back with why CMT is, I had worked at fundamental firms before, deep value, just really painful. Energy was cheap back then. Energy stocks were cheap. Look how cheap they are now. And the reason relative strength was, probably the biggest light bulb moment for me in my career of why wouldn't we be involved with things that are outperforming? You're never going to beat the market if you don't own things that are beating the market.
Oh, yeah.
It's just
I like that.
the way math works. It's just the way math works. And so looking for, again, like Abbott Lab, that's great. Abbott was a great breakout today. But from a relative standpoint, it's been underperforming for 2 or 3 months. So I don't necessarily need to have an allocation to that if I don't have a lot of confidence that it can even beat the S&P. So relative strength really came from, honestly, a desire to beat the market, not just to have some type of risk-adjusted return, but to truly kind of, I think it's the only way it works. I don't think anyone's, beaten their benchmark by owning things that are going up less than their benchmark. And again, the 8-week highs, just a time period that I've kind of tinkered with and kept with over the years. So again, nothing too, they didn't talk about 8-week highs in the CMT or anything like that.
So it just comes down to, this is what was the most appealing to your eye, kind of like what I had said a little bit back.
It was, and it worked with my personality. I guess with, buying breakouts versus buying the dips, I've never had a knack for finding the bottoms and things. I just haven't. It's not a skill set that I possess. It's not not a way for me to get emotionally involved in a stock is, buying the term. And I've seen some traders that are just amazing. And then I follow a lot on Twitter that, are, even though I'm not going to be involved in the same types of setups they are, some guys that are really good at it. But buying the dips is just emotionally, mentally, not my thing. And I think you got to be aware of that at some point. What things don't fit, I think you've got to recognize how your emotions, how you react to things when you are in a different type of setup. Because we all try different things when we're getting started.
We met later in our careers, and you and I just clicked. It was funny. There was like a group of us that met. A lot of the guys that were at the prop place that you were at, and we all got together and talking about trading. But you and I connected probably more than all of the other guys. And what was so interesting is about meeting you is that I learned so much from you, and we had so much in common. But something that was very different between the two of us was really our edges. It was weird because we were so similar in like the way we approached our trading business, but our edges were really different. Talk to us about you and your journey in developing your edge.
Yeah, I think the journey always continues and it evolves over time. But so I started out of college trading futures during the day. And at that point, my goal was just to find anybody who was successful and learn what they knew. And that way I could kind of find myself through that. So I found myself in a way through others. And I think that happens in a lot of things where you don't really know who you are until you know who you're not. And that's one of my themes. I find that puts me on track when I think that way. But I studied a lot of other traders and I found out how they made money. And slowly I found a few things that I liked and I picked them through time and added them to my strategy. And then I became kind of comfortable with what I had found that worked for me. And as time went on, I moved from futures during the day to stocks during the day, and then to stocks swing trading, and now stuff that I even hold for a few months. And I even jumped in crypto for a few years, and it's kind of evolved into a lot of different asset classes and timeframes, but it seems to be rooted in kind of the same strategies, even though the timeframes are different.
I think that so many new traders struggle with learning from other traders, trying to be like other traders, and they see other traders making money. You and I have experienced this, where you look at another trader and go, they're doing something right in front of you. You go and do the same thing and you don't make money. And it blew my mind. I'm going, why are they making money and I can't?
Right.
And you said that you picked a bunch of different things that you liked and then made your own. Talk to us about the specific things that you ended up liking and made your own.
Yeah, I will. First, a story. I sat next to a guy, and we both know the guy who was a fantastic trader back in Chicago. And I remember sitting next to him and thinking, it didn't do me a damn bit of good, honestly. I think I lost money when I sat next to him in terms of his big days. He would be really bullish and then flip bearish. And you can't do that unless you're inside the head of that trader and have the conviction to do the same move. So you can't really copy anybody in this business. And it seems like my parents would say, well, just do what that guy's doing. I thought, well, it seems easy, but it's not like that. So back to my edge and what the specifics behind it. I think stupid news is a big part of it. So that would be the market has a trend. I like the market to kind of determine what it wants to do. And a lot of times when it does do that, you'll get a headline that doesn't make a lot of sense and it will contradict that trend. And a lot of times I like to buy into that. And it's kind of an art form as to where to enter. So I've kind of made little rules about better ways to enter. And there's many examples. I can give some simple examples to give people an idea. So when Tesla first came out, they had a big trend up and then they had battery fires because the batteries were too low and they were scraping on the ground. I thought that was some stupid news. A recent one would be, if you remember a while back, Alibaba did a Hong Kong listing and the stock did really well after. But recently, Congress was pushing all of these potential laws through that we were going to ban these Chinese companies from the U.S. And you saw that big delisting push. And they cracked all those stocks, about 20%, a bunch of them, JD, PDD, all the Chinese internet stocks. And I thought that was an example of stupid news because Alibaba did it and it went fine for them. Those stocks had started to trend up on their own. And now we're coming off 20, 30% on the fear that they might list in Hong Kong. And so to me, that doesn't change the fact that the uptrend was already started before that. So I bought into that and that trade worked out for me. And it's just looking, you can do that on any time frame. And that's that's probably the core of what I do. And then there's also things like when the market is really busy, like during the coronavirus outbreak, I'll be day trading more and just taking advantage of volatility. But when that goes away, which is most of the time, then I kind of go back to the stupid news type stuff. And it's not the only thing I do, but that's probably the major thing I do.
I want to stay on that for a moment because that's one thing. When I met you and I met Brent, you guys really opened my eyes to this. You guys are the best researchers I know. Coming into any number, it's like I just want to talk to you and Brent and just say what you guys think. And you really taught me something about stupid news. And I want you to explain to everybody, because this is one of those things where everybody's probably going, Anthony, what is he talking about? I don't get that. Explain to everybody specifically what that means when people say stupid news and then how you use that as an edge in your trading.
Yeah, it means that there's something the market determines should go up or down, and it sets a trend. And you can do it against the trend, but I prefer the ones work a lot better with the trend. Like another example, I think examples can explain it even better. So a couple of years ago when there was the Cambridge Analytica fiasco with Facebook, if you remember that, when they had the data that they sold, they drug Facebook in front of Congress. I believe they brought Twitter too, but I think it was just Facebook. And Twitter stock got hammered on that. And it was mostly a Facebook issue, but Twitter got grouped in. And that was, I think they took Twitter from, I'm thinking 40 down to 26 or something, and then back up through 40 and into the 50s at one point, I believe. So I thought that was a stupid news trade because it wasn't really about Twitter. And to go down that much on something like that when the stock market had already determined it was trending up, they had some good earnings reports. So it's always looking at things that I'm not trying to be smarter than the market and guess why something should be going up or down. I'm looking at, okay, the market has decided this. And I like it, especially when it's kind of in the middle of the trend and there's a lot of maybe technical levels to take out. And then we get that big pullback against the trend based on something, that CEO scandal, a bribery scandal, something, even the JP Morgan whale trade back in the day, we had that one, if you remember that one. There's been Lululemon with the see-through pants and the CEO saying it was the women's fault. That was another one. I mean, you get a lot of them on a short time frame, but you get probably 5 to 10 really big ones every year.
Traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. Mickey took your class 23 years ago.
No.
And I know it's hard to believe, right, guys?
Time flies.
Time flies. Tell everybody how you got involved in trading and then eventually started University of Trading.
Anthony, I don't even know how to shortcut the story. It started many years ago in high school, where my group of guys were a bunch of thugs and we were playing basketball in Chicago, and one of my friends got in an altercation with somebody in another, playing basketball in the same area, and he wasn't a fighter, and I stepped in on his behalf and literally knocked the guy out. Because my dad was a street fighter, and that's what he taught me. And so then years later, 25, 30 years later, that friend sees me and he says, "Mick, good to see you." Someone who I loved. He was had been a Major League Baseball player. His career, he was behind Sano in third base, never got up to play for the Cubs, and now he's trading. He said, "Mick, I got to see you. I got to talk to you, tell you what I'm doing." And he told me how much money he made. Now, my dad didn't make much money. His dad didn't make much money. His dad drove a Silver Cup bread truck, which was like butternut bread. And so we came from families that didn't have much money. And he said, "Mick, I make a lot of money. I don't know what you do, but come and see what I do." So I came and saw what he did. I didn't understand what they were doing. Everybody's yelling and screaming. And then he would show me his cards. He said, "Mick, I made $1,000 here today." I said, "Wait a minute, $1,000? And then he said, "Come back." And I was busy and doing what I was doing. And then he said, "Do you want to do this?" I said, "Do what?" He said, "You want to be a trader?" I said, "I don't know. I have to talk to my wife. I have 2 girls." And I knew that it would be important to send the girls to college. I knew I had to make more money than what I was making as a principal of a school, etc. And I just finished a doctorate. And so I thought maybe I was going to be a superintendent of schools. And he said, "You should do this." He said, "I'll tell you what, I'm going to give you a seat for nothing." A seat was just the right to go on the floor, to be admitted to the floor and go into a pit to trade. I said, "Okay." He said, "You know what, Mick? You have other friends here who you've done nice things for. And one of your friends is going to give you $10,000. not loan it to you. They're going to give it to you. The other friend owns a bank, which was a clearing firm. And he was also the chairman of the exchange. His name was Brian Monison. He was brilliant, and I mean brilliant. And they said, you're going to come to our bank. And so I said, okay, that would be great. I go home and talk to my wife, and my wife gave me the gift that if every wife knew to give their husband a gift that my wife gave me was, Mick, do what you want, do whatever you want. Would she do it again? Probably not. But in the meantime, and then I start. I don't know anything. And interesting enough, I'm talking to my friends, who I had plenty of friends down there from my neighborhood in Chicago. I didn't understand one word they said. I asked them a question, and they couldn't explain it. And I figured out, you know what? They're just not educators. And no one really was teaching at the Merck like you should teach.
Nobody.
Anyway. And so I said, if I ever make it in this mess, and I really didn't know if I was going to make it, I said, I'll start a school. So I put that on the side. Then it was like 5 years later, and if you didn't own a seat, which I didn't own a seat at that time, I ran into a friend of my sister's who owned a clearing firm, and that clearing firm was Singer Winger. The first person was GMP, Brian Monison's. And he said, Mick, it's good to see you. And he said, I would always come to the house to see what a tough guy looked like. And what are you talking about, a tough guy look like? I'm here, I'm an adult. I have a family. What a tough guy look like? I look like this. In the meantime, he said, you have to move to the Board of Trade. I would like you to clear my firm. So, and it was, the story is so long. The person that was backing me, that brought me into the business, Chris Barkulis, he was a pork belly trader. The weekend before I was going to the Board of Trade, he got killed in a motor scooter accident. And I had to go to one of my fraternity brothers to ask him to back me. And they were backing me with a $50,000 T-bill. So I went to my fraternity brother. We met and we went to Singer Winger. Norm Singer was the president. And my fraternity brother said, after a discussion, he said, because he wanted to know what was going to happen to that money. Am I going to lose it all or what? And he said to Norm Singer, the president of the company, he said, do you want a check? Do you want cash? Do you want stock? And Norm sat there and he said, you know what? I need somebody in the S&Ps to fill for me. And so he gave me a job filling. I said, Norm, I've never filled an order. He said, you know what, Mick, you can do it. And here now I'm going to be in a pit at 6 o'clock in the morning and see 1,000 people, and I'm going to be trading on his behalf at the firm. The biggest traders, options traders, I'm going to be filling their orders in the S&P pit. Well, in the meantime, Norm Singer had a class that he let me come to once a week and learn how to trade. And that, I made money every day. I was careful because I learned how to trade. I wasn't afraid to trade, but I was a small trader and I didn't know how to become a bigger trader. But I also knew, going back, that if I ever make it in this mess, I'm going to teach and develop a school. So I developed a school with the Chicago Mercantile Exchange. I started a Saturday course that introduced students to the career. And the reason I wanted to do that, I wanted to help the people be able to decide in one day if the career was for them. So I would teach them as quickly as I could with other instructors, like guys like you were, and teach in one day whether it was for them. Because, not everybody likes to yell and scream and get in each other's face. It's embarrassing, it's hard, etc. And then I developed 3 classes: a basic class that would be taught on Tuesday, an intermediate class on Wednesday, an advanced class on Thursday at the end of each day. And we would meet on the floor in the pit because we were in business with the Merck. The Merck was marketing my class, which was their class too, because it was a Saturday seminar. And that's how we started the program. And so you would take the Saturday class. If you wanted to continue and learn to be a trader and stick through it, then you could come to these 3 other classes. And that's exactly what happened. And to watch people develop, to watch you three develop and watch the many, many other traders develop warmed my heart. We taught over 6,000 traders. And it was just, two of my son-in-laws are traders, and we're successful traders. And one is still in the market at the SIBO as a broker, and I think he's probably, if he's not the best broker in the business, he's at least second or third best. But he's guys like you. He's athletic. That doesn't mean he's an athlete. He's a tough guy. He can handle the downside, because that's the key in trading. You have to be able to take the failure, the mistakes, the days that you don't do well and get hurt. You have to come back the next day, and that is the secret. And if you could do that, if you could take a mistake, not berate yourself, come back the next day, not be afraid to lose, because many of the trades you lose, you have to be able to believe, as we said in another segment, believe in yourself.
Yep.
And that's how it was. And it was a wonderful experience. And then to have you guys come back and be instructors, and everybody did that for nothing.
Yeah, everybody did it for nothing.
For nothing. And because it was practice.
Yes.
Isn't that what, it's like to be a great, Stephen Curry. How does anybody make that many baskets? But I know it's about practicing. So that was one of the secrets. I had taken a course called the Silver Mind Control, where it enabled you to think in your head and go over the routine. In other words, and I did this with my track team and football team, where you would practice in your head, go over the plays, go over your touchdowns, making a basket, et cetera, et cetera. So we would go over our trades. So even if you weren't practicing on the floor at the end of the day, you could go home and practice. And that was how you could become a good trader, because you could buy in the right place and get out, buy in the wrong place and get out with a loser. That was the toughest thing to do. But if you could do it in your head, and you've done it through repetition. It's about repetition, just like Curry going out shooting 1,000 shots. And so that's what you all learned to do. And in the meantime, that's what you three must have done to be the traders that you were. You just dedicated yourself to being the best person that you could be. And that's really the only thing that ever was in my mind, to help each one of you to be the best person that you could be in whatever endeavor that was.
I've said this so many times. It's not about your strategy. I mean, once people get involved in trading, you either love it or you hate it right away. And I don't think there's a middle ground for it. But
no, absolutely.
And then once you find your market, the strategy itself, it doesn't really matter, because if you love what you're doing, you're gonna find a way to make it work.
This is exactly it. And this is like some people, you kind of try and tell people, like you said yourself, it's like, it's okay, you want to be a trader, fine, but there's a million different contracts that you can trade, and they've all got their own personality, and you need to find something that suits you. It's like, I couldn't trade stirs, and I've got some very close friends that will only ever trade stirs, like short-term interest rate products. I'm sure everyone knows, but just in case anyone didn't, I know it's a cliche and whatnot, but it's horses for courses. Some of us do well in certain markets, some of us do well in other markets. But you have to have the passion. And if you're looking at a contract wishing, like you were doing in Eurodollar P, you wished you were somewhere else. Well, if they forced you to and say, well, someone said, like, you have to trade Eurodollars, you'd never done very well with it.
Never.
And you would have probably given it up. But I think, and that's what half the battle is. I think it's finding markets that you're comfortable with, but more importantly, finding markets that you have an affinity with, have a resonance with, because just by having that affinity with the market, just by enjoying being around that market, whether you like it or not, you're going to take in so much more information, and you're going to, it won't be a job for you. It will be a passion.
Yes.
And that's what trading is at the end of the day. Yeah, well, in my opinion, I know you'll get some quants that just rattle off numbers and whatnot, but that's kind of not my bag at all. So
Yeah.
I can't speak for them.
Yeah, I agree. I mean, it's like, and I talk with a lot of quants, and for them, it just comes down to the numbers, right? I mean,
Yes,
but their passion is numbers. So when you talk to them,
there
that's
you go.
how they think.
Yeah, that exactly. That, do you know what? That's perfect. Yeah, you say, well, they're not passionate about the market. Well, they are. They're passionate about the numbers that the markets generate.
Yes.
Yeah. So that'll do.
Yeah, I mean, and then that's not me. I'm somebody I'm a discretionary day trader who I just love markets. I love everything about waking up every day and going through my process and my prep, and even these days where lately over the last few weeks, I've been doing a lot more watching, just because it's slower, but I still love the whole process. So
you're sitting on your hands, but you're still loving sitting on your hands.
Yeah, and that took a while for me to embrace that because I don't like sitting on my hands. But with age and experience, you kind of figure out that it's a little bit cheaper.
Yeah. So sorry, saying you love sitting on your hands is probably the wrong way to say it, but you love still watching the markets whether or not you're trading.
Yeah. So let's talk a little bit about your process. You found a market that you really liked. It resonated with you.
Yeah.
How did you go about? Because I know that I believe that you're definitely more, like you said, the global macro kind of thinking.
Yeah. So that was that. So how I started was obviously doing the oil trading, and my process of trading changed completely. I went from scalping intraday, for years, then trading calendar spreads, and the process would always be, obviously processes evolve. To begin with, probably not much of a process. Just kind of come in and wing it. As we many of us do when we first start, which is kind of why I now try and help people by saying that you do need a process from the start, and because it will really set you off. But over the years, so my process then evolved into taking more of forcing myself to step back and try and take in more. It's an overused term again, but like the macro themes, just try and, this whole, have some kind of wide angle lens in front of me rather than being too particular on the market. So I'll build up. I won't have like a daily process. I'll try and it'll take me weeks to build up pictures, and pretty much it's just full immersion in, whatever's going on in the world. Try and really drill down and research as much as possible, and constantly checking, what the sentiment is, because I do think sentiment's a big part. And if I can find some kind of gap where maybe the sentiment isn't currently where I believe it should be, that'll be then whatever product that is. I won't go in looking at a specific product. I'll let the kind of sentiment tell me what products might be open to having more value taken out of them. Just because I think, if I've gone from focusing on a certain number of contracts, or like say 3 or 4, and I find that very limiting. So now, because I'm looking at global pictures all over the shop, I can't then just try and say something's going on. I don't say something's going on with China buying corn or whatever, because at the moment, their chicken production's going through the roof, so they're going to need feed crop. Well, if I was only fixated on trading the NASDAQ, crude and gold, there's no trade. And I might try and force myself into putting a trade on, using those products. Whereas now, because I allow myself to trade any product that I want, I can now find the product that suits the theme that I'm building up. So it's difficult to say that I've got a rigid process, because I haven't, and I never really have. But it's one of basically complete immersion in as much of all topics, basically as much as what's going on as possible, and then trying to eke out where would be the best trade to put on, given basically every product I've got in front of me. But that's what I started doing a little while ago, and it's really working for me because it frees up my mind so much. But I must stress as well, like recently I've really reined back my trading, and like focused on launching my business Priapus, which is kind of where everything's going at the moment.
Well, we're going to get into a little bit more about what you're doing with Priapus in a moment, but I want to talk about, you said something that I really focus on, and that's a theme. But we do it so differently. And this is what's interesting is that for me, I only trade the S&P, the Russell, and I trade the 10-year ultras. I look for the themes that are impacting them. So I do it from almost from a different place. So I say, okay, what's impacting the S&P right now? What's impacting the 10-year? And the obvious answer is the Fed, right? So you and I actually talked about this in the webinar, and and there was several people that had come on the podcast from. There's a whole list of people I could name off that were really talking to me more and more about. They're like, you don't understand how much the Fed is doing right now. This is like QE 1, 2, and 3 all within a month, and I'm sitting there going, okay. So what you're saying to me is that don't be short, right? And I'm just thinking about this, and so I find the theme that works for the market that's impacting the market I'm trading. You go about it another way, and see, for me, my brain doesn't work that way. That's very difficult. Talk to us about like how you sit back and go, because there's so many themes out there, Ryan. Right? I mean, there really is.
It's obviously, it doesn't help that I really am appalling at the best of times at explaining myself. But I will sit here at my desk for 15 hours a day. I've got the Squawk going, I've got Twitter going, I've got Reuters going. I've got all the feeds coming in, and on top of that, I'm reading as much. I've got like all the geopolitical kind of reporters that I follow coming in, but also, there's lots of really good premium news providers and stuff like Stratfor and whatnot, which are and foreign policy and whatnot. Basically, like I say, it's not something that you can kind of come in one day and build up a picture. Like what I'm building up it's basically, I've been doing it for the last 3 or 4 years, and I'm constantly just adding bits daily to what I already know, if that makes sense. So I'm not coming in and trying to learn, okay, what's going on. I'm not coming in and learning about the trade deal now. I've already got a really good picture of what's going on in the trade deal, like the US-China trade agreement, lack of, shall we say. But it's like every day, it's just basically, like I say, it's just full immersion. And I know people, like I've had people sit with me that have tried to do the same, and they can't. It's the ability to unfocus, basically, if that makes sense. I won't focus on something too particular in too great a detail, and I do think that's where a lot of people go wrong if they try and do this kind of method of doing things. It's basically just trying to take in as much as possible from as many different sources, just to allow yourself to build up the picture.
So you said that you're doing more of the day trading. I mean, I've talked with you so many times over the years on this show and in private, and I know that you are someone who holds positions a little bit longer. I don't know that when I've talked to you in the past, that you were really doing the really super short-term day trading as much. I know you've done it, but are you doing more of that now in this environment?
I really am. And what's really neat about our ability as traders to slice up psychology, you're right. Normally, if I can find a trend and I think it's going to last hours, days, or if not weeks, I want to hang on. That's just letting the market do the heavy lifting for me. But that also means I expect there to be sort of an organized story around the trade, an organized narrative, that data just continues to feed it. There's a lot of fuel in that tank. And as soon as February, March, April rolled around, I had to question that, because we're always dealing with just a whole new narrative, a whole new set of circumstances. So I did what I think any trader who can be fluid with timeframes did. I said, well, just shorten this thing down to a 1 minute. Let me shorten this down to where I'm really making most of my decisions the first 2 hours, the cash open, and I want to be as flat as possible going into the close and just start the next day with fresh eyes and a flat book and just rebuild based on whatever I've got that day. So same strategies in a lot of ways, just shortening the time frame.
You already mentioned process, and I totally agree with you that, even though we say that we're discretionary, I say that I'm discretionary, and I do absolutely have a process. And I'm curious for you, you say that you're using the same strategy that you were using on, well, not longer term, but what would you classify yourself coming into COVID? More of like a medium term swing trader?
Yeah, it's probably the best way to sort of generically describe what I'm doing. If I can be in a market for a few days, maybe a few weeks, I'm pretty happy if I can get that kind of organization. But I don't stay rigid to, well, if it's a swing trade, it's got to be 3 to 5 days. Or if if it's a core position, it's got to be, a few months. I'm not rigid to that. I'm just looking to get in at a certain level, take acceptable risk. And if that target comes in 1 hour or 1 week, I'll still take it. So I still let price be the determining factor and not time horizon. But by shortening the time frame, we also shorten time horizon. We also shorten exposure to the market, which is, of course, part of risk. So the same strategies, meaning if I can find that structure, that organization on a 1 minute chart, I'll ride that out for maybe the session, if possible, or maybe just to the midday doldrums, but it won't be past the close.
Yeah, exactly. And you said it the same way that I would say it about myself. Price gets me in and price gets me out. And when markets are slower, like right now, I use a 60-minute chart, and that's what I'm using for my entries and my exits when, because for me, I want to fit within the day time frame, but I don't want to be too short term. And when it was busier, maybe a month or two ago, I was using 1,000 tick or a 5-minute because the 60 minutes were so wide that my targets weren't getting hit. But once again, like you said, same process, just change the time frame based upon the environment. And I think that's where a lot of people go wrong, is that they have a process or something that they look at on the longer term, and they don't use that same process for the shorter term. So talk to us a little bit about your process from what you were doing prior to coming into COVID, and then how you adjusted it, the actual process of adjusting it to the shorter time frames to fit what you were trying to achieve when the markets got a little busier.
Sure. No, I love the framework of that, and it kind of going back to life often dictates how we trade. It's not ideal, but a lot of times whatever's going around in life, what we need to tend to apart from the charts, will dictate what I can do. So, clearly February, March became hugely uncertain. And the less certain that I am, the shorter my time frames, the less I think that I can project levels, support, resistance, tendencies out into the future. So my natural instinct is, in times of uncertainty, let's just keep things a little closer to the vest. Let's go to a strategy where I can shorten the time frame and be out by the end of the day. Now, conversely, if I go back to, say, October, November, I was happy finding a daily time frame, waiting for a pullback, and riding that out for days, if not a week, maybe 10 days. And that's really what the big change became. And maybe for a lot of traders getting caught up on the time frames, maybe it's really a conversation about time horizon, because the less I feel I can project out into the future and think that I'm pretty certain that we'll either see higher highs and higher lows 5-6 days from now, or whatever the case may be of the trend, the less certain I feel about that, the shorter the time frame has to become. So I think the big adjustment was that uncertainty about time horizon. And so if that's uncertain, I think the best way to manage risk then in times of uncertainty is just shorten that time frame down. So that's it. That's the big adjustment.